The Eurozone taking some steps to get the economy back on track. We do have an ECB decision due out about 7:45 Eastern time. Joining us right now is Gemma Godfrey. She's Brooks Macdonald Asset Management Head of Investment Strategy. Also standing by at the CME is Michael Gurka. But we want to start things off right here, Gemma, and talk about what you see coming out of the ECB. No decision is expected, but what Mario Draghi has to say could be very important.
Well, exactly. I mean, Europe is struggling at the moment with a lack of credibility. And actually, all eyes are going to be on Spain. You know, a bailout is inevitable, and there are two things to watch, two things that are holding him back. First of all, political pressure. So
from Germany?
Well, actually, just internally, domestically, the Prime Minister has never had, such low...
Rajoy.
Yeah, exactly, right. Exactly. I mean, 84% have no faith in him. And this has really deteriorated since he let their banks be bailed out. So he's under political pressure domestically. And then secondly, what are the terms going to be like? He's holding back because he wants to implement reforms himself rather than have them imposed. And it could be very tough with Germany being able to actually now vote on rescue funds.
I mean, Rajoy may be facing internal pressures, but he's also got the market pressures. And when you start looking at the 10-year, how much time does he have and how much time will markets give him before they say, OK, this is it, you have to come to the table?
Exactly. I mean, he's come out and very clearly said that as soon as yields become unsustainable, he will ask for a bailout. So he has kind of put that cap already in place. The only complication is obviously with Draghi and his latest bond buying proposal coming out. That's kind of put a bit of a floor under the markets, right, which means that it's very unlikely that yields are going to become elevated anytime soon. It'll just gradually be deteriorating as credibility is damaged.
You know, Gemma, one of the things that's kind of stunned me is watching the dollar-euro and where it stands. I mean, today it's still at 129, which... You look at the problems that Europe still has to deal with. Granted, America's got its own set of woes, but that 129 just seems like it's a little out of whack.
Also in the equity markets or in the bond markets, if you look at where CDS spreads are and where European banking shares are, they're at the level that they were back in March. And in March, there's a lot of optimism. Again, we had that 3-year, LTRO come out, and investors thought that's it, the problem's solved, and they were disappointed. And we're kind of seeing that again. And the concern that we have as investors is that there's a lot of risks out there that people aren't really picking up on. The fact that this bond buying program is conditional means that it's actually hard to police. How can you give a country that's asked for support and then withdraw it and not expect to have the market kind of implode as a result of that?
So the key being that there are a lot of potential mines along the way that could get stepped on?
Yeah, I mean, if you want, I could give a bit of a physics quip.
Please do.
To link it in, because I know we were discussing that over the break.
Yes.
Heisenberg's uncertainty principle. That's a prime one. The more you understand about a particle's momentum, the speed that it's going at, the less you know about
its location.
OK, and you can say that about Europe. The more that we understand about how fast things are deteriorating, the less we understand the full extent of how big the problem is. So there you go.
That sounds a little concerning. Michael, why don't you weigh in on this for a second? You hear what Gemma's saying. I've been surprised at how the market has kind of brushed off Europe for quite a while. Do you worry that it's going to come back into the forefront?
Absolutely. Well done, CNBC. There's no one covering Europe and sorting it out better than Gemma. We follow her closely. And I would agree with a lot of that. And, for us, a lot of it here in the markets are strictly just pivot points. I mean, you mentioned 129. There's a lot of behooved traders that are wondering why we're still up at this levels or even coming off of a breach of 130 when the market clearly has a different perception as we understand more of where this momentum has not gone. Particularly, there's some markets that we watch that show where the growth is going. And right now, crude oil is one of them because we're below 89 and holding it from a demand perspective. And then there's a whole component of where is the worry, and all of a sudden gold is getting ready to breach 1800. I think if you mix all of that together, you're starting to understand that the hurdle in the middle of the track right now, being the payroll number, is really going to be not necessarily a deciding factor, but it's going to help you either get further away from those 2 points I just mentioned. And of course, Europe is never going to leave the scenario, at least for the balance of this quarter or the next.
I'm sorry, for the balance of this quarter, what? What was that, Michael?
Or the next. I don't want to just definitively draw it at the end of this year. I mean, the first quarter of next year, again, is going to have some serious scenarios with implementation, be it the ECB or the Fed, because there's these expectations of unlimited easing and what is necessary. But if these solutions or these implementations don't really work themselves into the marketplace or into Main Street in particular, then all of a sudden, this pragma is really going to make a difference.
And Mike, by the way, great to be on the show with you again. I mean, one of the complications there is also domestically that depositors are just withdrawing deposits at one of the fastest rates that we've seen since the beginning of the year, and it's creating this instability, and something has to be done about it. And this is causing a lot of concern within the market, and it's that undercurrent that's not yet being realised, potentially by this over-optimism that we're seeing.
All right. Michael, thank you for showing up today. And Gemma, thank you so much for being on set. It's always a pleasure talking to you.
Thank you very much.